morning, everybody, and welcome to the second Easy Equities. One of the things I love most about Easy Equities are the diverse bunch of investors we have. There are over 400,000 of you, and you come from all walks of life. But what we share is a passion to invest and to learn more. So a big welcome to you. The other thing I absolutely love about Easy Equities is the fabulous team that I get to work with. And I'm joined today by one of those amazing people, Nilan, Morar, who's head of trading, but he actually does a million other things at Easy Equities. Morning, Nilan. Nice to have you with us again. Good time to buy shares in South Africa? Must we buy or must we sell? What must we do?
So, the question largely relates to part of the discussion that we had yesterday. And it's in that decision around whether or not you're trading or investing. If you're investing, then there's a strong argument that, trying to time the market is a useless exercise, and it actually is oftentimes unsuccessful, and that you should just continue buying in weakness. If you consider an investment like a long-term investment, like a retirement annuity or a pension fund or provident fund, those types of investments make regular purchases throughout the duration of 20 or 30 years. And so the benefit you get from that is, if your contribution towards that, let's say for argument's sake, is 1,000 Rand a month, well, 1,000 Rand a month when the index is at 50,000 versus 1,000 Rand a month when the index is at 30,000 simply means that you buy more during weak periods. So, in the answer lies a question, to be honest. Are you investing or are you trading? When you're investing, simple rule of thumb would be continue buying and adding to your portfolio. Take advantage of weakness that you see in the market, because as we all know, and we've seen this through 2000 and 2002, 2008, markets do correct over time. Situations change. We may think that we're at the end of the world now, but in a year's time, we're going to look back and say that was the best buying opportunity. So don't put yourself in that position of regret.
Great, thanks, Nilan. So just before we explore that a bit more, just to remind everybody, please ask your questions in the Q&A section. The team will get to those, but largely just around the topic on pricing. Anything else, please check out our FAQs, which is at support.easyequities.co.za. But we will try and get to all your questions. So Nilan, your answer, of course, is right, but I want to challenge you a little bit, because as the person who knows far less about investment, one of the things that I love also is learning from Easy Equities investors. So I get the business day each day, and today it tells me that the JSE indices were down yesterday by a certain percent, bonds were up by a certain percent, and a whole bunch of other stuff, most of which myself and 98% of normal people in the world don't understand, and I would argue not necessarily should care about. And so what we've seen on the platform is that people who take your advice as a base, apply their minds, so they've got some background, but then use their own gut and common sense, are often really smart investors. So they must trust themselves. So if I hear from my mates that a certain landlord is not paying his rent during the lockdown period because they feel it's not right, I might decide to not buy their shares, or in fact sell them because it doesn't sit well with my values. Or if my mate says, geez, like that's an amazing sports team and they're listed, and I buy their shares. And so do you think there's value in ordinary investors like myself and many of the people on the Easy Equities platform investing like that? Or do you think that's wrong?
So essentially what you're addressing is the impact of emotion and allowing emotion to assist you in decision making. And there's an extremely fine line. Many people would say that you need to remove emotion totally from your investment decisions. And whilst in certain instances that could be true, there's a certain amount of gut feel that you develop over time through experience that would actually teach you not to ignore that emotion. And so you're 100% right in the sense that I think you've got to trust yourself. And from our numbers and our stats, we're seeing that individuals' portfolios, and not necessarily professionals at investing or providing advice, are outperforming some of the best funds or most renowned funds that we have listed locally in terms of performance. And a story rings true, and I know that Charles used the story quite often when we started, and it's about this kid that wanted to buy one share of every listed company. And when we interviewed him and asked him why, his visionary sort of status came out in him, and his reply was quite profound, in the sense that he said, well, one day when I'm done with studying, I'm going to work for one of these companies. I want to be able to tell them that I own a piece of you. And so, I don't think, whilst I don't think that you can remove, because we're human, you can remove all emotion from trading, you got to try and fine tune when you trust that emotion, and or when you need to sort of ignore that emotion, and there's a fine line between those two.
Absolutely, and I think it's fantastic your point there, that it is a balance, and that's why learn from each other, also our users. I want to repeat, trust yourself. In my experience now, in the years that we've been running Easy Equities, our users know far more than you think you do. Check out our research, listen to your mates, read things like the Business Day if you can, listen to the radio, but take a combination of all of those things and test. Easy Equities is really proud that a user who puts in R5 is as valuable as the user who puts in 5,000 or 5 million. We treat that user the same. We get as much of a kick out of it, which is fantastic. Okay, Nilan, I want to carry on and just remind everybody that's listening, we're going to be giving away R1,000 in an Easy Equities account at the end of the session. And Nilan's going to decide, but I haven't told him yet what he has to do, so stay tuned. So next, Nilan, I want to know when shares are suspended on our platform, because it's seriously, I want to swear me off, and also a couple of my teammates who work in the client engagement team, who are just legends, plying through tons of queries, getting our clients sorted. Why do we suspend shares? I mean, what's the hell? When do we do it? Why do we do it? Is the system broken? What's the story, please?
Okay, so there are a few reasons behind suspensions. The most common ones, and again, we touched on this briefly yesterday, and perhaps we can go into it in a bit more detail today. If an underlying, okay, let me start with saying that we rely solely on what's available to us from the market. Okay, so we reference the exchange. If a share is in normal, continuous trading, it'll be available on the platform. There are times when these shares are suspended or go into an auction phase on the exchange itself, which means we actually can't physically trade. You can't match orders. You can't, go and buy at a specific price that you're seeing. And there are various reasons as to why they go into auctions. We'll deal with that later, but that's one.
And when you say, sorry to interrupt you, when you say exchange, you mean the Joburg Stock Exchange, right?
I mean the JSE, correct. Yes.
Cool.
So certainly on your, on your RAND account, effectively, those are all JSE listed instruments that are on there. So if they're in this auction phase, for example, they get suspended. A company can also request a suspension. Let's say a company, and there are a handful of examples recently of companies that are applying for business rescue, are in the process of business administration. They request to the exchange to please have their shares suspended. Tongaat has been one that has gone through that before relisting recently. And for that duration that they've suspended on exchange, they'll be suspended on our platform, because technically there is nothing you can do. There are also other shares that effectively, ultimately are going to delist, and they get suspended on exchange. There are naturally, from time to time, technical issues as well.
Sorry, Nilan, just to interrupt you there. So we understand the suspension that you mentioned. So a share, for instance, like a Group 5, which is going to delist, so they will at some stage be suspended, right?
Correct.
And a share like Comair that goes into business rescue would be suspended.
Correct. So Comair has requested to the exchange that their shares are suspended on exchange.
So this is that nothing wrong either with the Joburg Stock Exchange or with Easy Equities. In fact, this is all part of a normal way to invest. And this is, I won't call it good news, but these are part of the dynamics that our Easy Equities users can be aware of and use to their advantage.
Yes, absolutely. And it's a normal function of the market.
That's fantastic. And I interrupted you there. We're carrying on in terms of other suspensions, perhaps.
Yes, and so from time to time, I mean, we all rely heavily on technology. There are multiple conduits within which these millions of prices that are made on the exchange need to flow through multiple participants and vendors and systems and data distributors. And sometimes, you know, again, out of our control, sometimes technology breaks. And so there are times also when we may suspend things online because for the interest of the users, those prices are not accurate, or they are just completely wrong, or they haven't updated due to an underlying technology issue. Fortunately, we don't experience too much of that, and all our vendors are on call pretty much 24 hours a day, as is our support team.
And maybe a tip for our easy equities users: if you see that your share is suspended, you can't trade, it might be worthwhile that you can also check out what's happening on the JSE social media feeds. They're really good at updating stuff. You might consider going to the actual company's site, because in my experience, they're often also sharing some information there. So as your first point of call, don't necessarily think something is wrong. It's lacquer to explain, to explore a little bit. Nilan, the next thing which touches on that, auctions. What are auctions? Yes. I mean, auctions such a weird concept. What place does it have in this investment world? And is it just another way that clever people like you are trying to confuse folks like me? And what's the point?
Yeah, so it's a very daunting topic, and people have debated and gone around it. But in essence, once it's broken down, it's actually a very simple concept. So if we go back in time, and I'm talking back about 20 years now, it was possible to manipulate the price of a share in a small quantum of shares. So one could trade 5 shares and move an illiquid share 5%, for example. And oftentimes what would happen is, as you may or may not be aware, many fund managers measure their performance on a quarterly basis. So they put out quarterly fact sheets, they compare themselves to each other quarterly in terms of performance, etc. And there was always the fear that, with a little bit of balance sheet behind you and some capital, you could move the market the way you wanted to. So the exchange came up with this concept of having an auction that determines the fair price to open the day on, to close the day on, and there are other iterations of auctions. There are about 5 different times that you could have an auction, and we'll talk briefly about how they work and when they work. Functionally, the auction process is literally a process of people loading up orders both on the buy side and on the sell side. And there's an algorithm that runs in the background, and the sole purpose of the algorithm is to actually set the price where maximum volume changes hands. So, by way of an example, let's say a share is normally trading in the 100 Rand range. We now come to the auction period, and let's talk about a closing auction. So firstly, the market opens by the same mechanism and closes by the same mechanism. The closing auction starts at 10:05. Where people can load up orders in those 10 minutes before 5 o'clock, right? And incidentally, in terms of a single execution, maximum volume goes through during these auctions. So all these buyers and sellers load up their orders. Now, traditionally, if somebody was call it a forced seller or had to sell, right? Typically, one would put an order in or an offer in at 90 Rand for a stock that's trading at 100, and you would know that if it closes close to 100 Rand, you're going to get done. You're going to get filled. You're going to sell your stock. And so all these orders load up. The more aggressive buyers would load up bids that are higher. The more aggressive sellers would load up bids that are lower. So all of a sudden, you have a market where typically your bid price is lower than your offer price. In other words, sellers always want to sell at a higher price, and buyers always want to buy at a lower price. That normal function of a continuous market gets inverted, and you see more aggressive buyers with higher prices and more aggressive sellers with lower prices. And somewhere in the middle of those two is where maximum volume is going to go through.
Yeah.
And that at that point is where, at 5 o'clock, the whole thing settles. And at that point is what publishes the actual closing price.
Yeah. Great, Nilan. That makes fantastic sense. And I think for me, if you're a user that really is interested in that, you can read about it, you can check out some of our research. But for the majority of us, we're not really affected by it. We can look at the prices on the platform and it doesn't really affect us. It's really interesting, but it's not something that a lot of us need to spend time understanding. But it is good to get that background. So Nilan, I want to
Sure,
ask
Carel. And sorry, just
yeah.
on that.
Nilan, you can
we
always
mentioned.
interrupt me because you talk lots of sense. And I'm going to get your daughter to interrupt us now as well because she's part of the Easy family.
Yeah, my daughter's had some interesting questions as well. So we've mentioned an open auction, an opening auction. Market opens by that mechanism. We've mentioned a closing auction. Market closes by that mechanism. The ZA03, there's a segment in the market which are the small caps and illiquids. And they sort of classified into the ZA03 classification on exchange. They routinely go into a midday auction as well. Same process, but just from 12 to 12:15, they'll be suspended on the platform, which users would have figured out and seen. They'll be suspended on the platform, and that goes through a midday auction. And again, it's just around price discovery.
So that's really good, Nilan, because one of our users just asked, is it only, is it all shares that go through the auction or only shares with a high trade volume?
No, so every single share opens by means of an auction. Every single share closes by means of an auction. Specific shares, this classification of the illiquids and small caps in ZA03 segment of the market go through a midday auction. Not all of them go. There's a quarterly auction as well, which is linked to the futures closeout, where they rebalance the top 40 index, for example, or any futures, single stock futures that are written against underlying script. And that happens as well at a specific time on a specific day. And then I suppose one that is quite important and perhaps reared its head more recently given the volatility is intraday volatility auctions. And I'd like to spend just a few minutes on that because we've received quite a few questions around that. And to Easy Equities users, they see the stock as suspended without knowing why.
Can you give us an example, Nilan? Would this be like a Sasol in volatility?
Absolutely. Yeah, okay. Absolutely.
So I get onto the platform, the user, Sasol is suspended. I think there's a problem. I'm irritated. But in fact, it's in an intraday auction.
Correct, an intraday volatility auction. So what happens is that, as a result of 2008, largely where many international exchanges sold off heavily and aggressively within short spaces of time, there was talk of the introduction of what they called in the US circuit breakers. And they were implemented in 2013 after a flash crash in May, coincidentally, where somebody made a mistake, placed an order in an exchange at a price much lower than the stock was trading. So it moved the stock, it spiked the stock lower, but then you had all these algorithms in the background that continued selling because of the price action. So it fed upon itself. And, you had, if I'm not mistaken, about an 18 or 20% move on the Dow Jones within the space of about 4.5 minutes. Right, so the exchange kicked in these things that they call circuit breakers, where they actually halt trading completely after a certain percentage move, and the exchange does it because the exchange futures trades outside of US cash times, so outside of 4:30 or 3:30 now when the US markets open, the futures are still trading. The exchange has certain percentages at that period. So, for example, they might say if it moves by 7%. Pre-cash US open, we're going to halt trading. And so in a very similar concept, the exchange, our local exchange, the JSE, introduced things called volatility auctions. And so there are certain bands, percentage bands, like the top 40 has a band of 10%. If a stock within the top 40 moves by 10% or more, it kicks it into a volatility auction. A few weeks ago, coming back to your Sasol example, we saw Sasol move down 35% in 35 minutes. And so there were a series of volatility auctions. At every 10% move, it kicks it into auction. That's not normal trading. Prices are inverted. And so those stocks will be suspended over those periods. But the increase of that is becoming prevalent because we've seen increased volatility recently.
And I think, Nilan, the important point is for the majority of the hundreds of thousands of easy equities users, you're investing. And so you should perhaps not necessarily buying or selling in these periods. But for traders, with our delayed pricing and with the things such as volatility auctions, easy equities is not a trading platform for guys who want to make a quick buck. We are there for ordinary investors who want to invest, whether it's your 5 Rand or your 5 million Rand. That's what we want. So don't be playing the markets or timing the markets, because this is not the platform for that. It's not a casino, it's an investment platform.
Absolutely. So, and that also speaks to one of the points from one of the attendees just now, asking what is the benefits of sort of recurring investments, like buying every month versus once off or trying to time it. And it's exactly that. You summarize that, and we spoke about this at the start. If you can tell me where the next 10% in this market is, then I want to talk to you, And if you don't know, well, then just do it monthly, because if it goes lower, you're actually going to get more exposure during weakness. So don't try and time the markets.
No, Nilan, you are giving fantastic answers, but I want to make sure that we stop on time. So I'm going to ask you one question because I want to give away 1,000 Rand, and I also want to answer a couple of questions. So just very briefly on USD shares on the Easy Equities platform. I can buy American shares, so shares listed in America. I can use my Rands. It's all legal. It's not exchange control things and forms I have to fill in. It's very easy. But what is the price that I get? Is this price set by you arbitrarily, the trading desk, by the JSE? I mean, what is that pricing? Or am I paying the same as an investor in America would be paying for a share like Tesla?
Yes, absolutely. So it works exactly on the principle that we have our Rand accounts. You can easily, when you say you can use Rands, you can use your Rands to fund a dollar account. So we have a facility called Easy FX, and we've been seeing a lot of activity on that, where you can transfer your Rands. We use Citibank, and that then gets delivered as dollars to us in New York. That gets credited into your USD account balance, and then you buy USD listed shares. You pay dollars for shares, and the pricing works exactly the same as it does here. We reference the underlying exchange that those are listed on, and that's the price you get.
Great, thanks. So for those of you who haven't tried your USD accounts, give it a shot. Also, no minimums. Tabang and Nicole, thanks for your questions. So yes, we're going to be launching Australia soon. That means that there will be Australian shares available to buy for South Africans. But we also have a team in Australia, and we're going to be providing a similar concept to the Australian market. And that's imminent alongside our Easy Properties exciting new venture. So Nilan, I want to ask you to help me give away this 1,000 Rand. So the head of Tesla, what's his name? Anybody should know this.
We're asking panelists, right?
No, I'm asking you.
The head of Tesla, Musk.
Yes, Elon Musk. So that wasn't the trick question. So he's just had another baby. I believe he's got quite a few children with quite a few partners. So pronounce his baby.
Oh my God, please don't ask me for his baby's name.
So all the users that are listening, those of you who think you can pronounce his name, just take a short voice note, put it on the Easy Equities social media accounts, and the guys, Lesedi and Bonolo, and the others that run it will get 1,000 Rand to a random person that gets it right. So pronounce Elon Musk. Good luck. It's fascinating, but it gets you 1,000 Rand in your Easy Equities account. So just a short voice note.
It does sound like something off the periodic table, I must be honest.
Tag Easy Equities. You can tag Tesla as you want, if you want, and we'll give 1,000 Rand away to somebody during the course of the day. So do that in the next couple of hours, and I think let's ask Lesedi and Bonolo and the guys to announce it about midday. So Nilan, to conclude, I want to just answer a couple. So just for the question, for those that I'm wanting Elon Musk's latest child's name, and I need you to pronounce it via a voice note on our social media. Cool. So thank you very much for all those people that have been asking questions. To repeat, support.easyequities.co.za gives you lots of FAQs. Please use that as your first port of call. Research.easyequities.co.za gives you lots of free, bespoke, amazing stuff written by people like The Beef, who's one of our teammates who does some fantastic work, many other contributors, and then trust your gut. Use social media, read, listen, and continue happy investing. So Nilan, I think maybe just in the 3 minutes that we've got left, there've been a couple of questions around bond markets and commodity. So maybe just want to talk a little bit about that. What is a bond for a start? What is I mean, why should I care as an investor on easy equities?
Okay, so actually that's interesting because there's a new bond ETF that listed last week as well. So
and I'm told that this is a good time to perhaps be in bonds, and I see governments buying bonds. So it'd be nice if you could make some sense first, please. Don't give the wrong answer, Nilan.
No, I'll try not to. Bonds are debt instruments used to raise capital. So you would notice, I mean, typically the biggest issuers of bonds are the treasuries of countries, governments, exactly, because we need to finance the ongoings of our country, and that's the typical measure that they use to raise bonds. I mean, there are multiple variations. You could get currency bonds, so you could have SA raising dollars or euros, for example, and issuing bonds, and ultimately a bondholder faces the risk of the country, so they face the risk of default, of a country. Now the reason why people are talking about bonds currently is because of the recent downgrade that we got. It effectively means that you need to compensate investors who are holding our paper more for the risk they're assuming. We are a lower investment grade, so if bonds yielded 10% previously, well, you're not going to get the attraction and the quantum of investment than you would if they yielded 12% currently. So that is what people are referring to when they talk about the value that they're seeing in bonds at the moment. It's the fact that yield relative to what cash would earn you in a bank, and we know that interest rates have come down recently. The bond yield outstrips that.
Cool. Nilan, so just in conclusion, to go back to a little bit of what we were speaking about, the suspension and delisting, etc., because a couple of users have asked us what happens to their shares. So would I be correct in saying, first of all, your cash is safe? So if the share ended at a certain rate, it is in your account, nobody's run away with it, and we would take our instructions from the exchange and other regulatory bodies once they decide what's happening there. So this would be when a share like a Comair is suspended. So we don't know yet if that company is going to delist from the stock exchange, trade again. They're in that process. And so maybe let's not use that example. Let's use Group 5. So if I hold Group 5 shares and they delist, what happens to me as a user?
So effectively, that value is locked up. So let's say you had 5,000 Rand in those Group 5 shares at the point of delisting. That value is locked up. When it becomes relevant again is, let's say there's a Murray and Roberts that's now talking to Group 5 and they want to buy out the shareholding that's left. Then it might become relevant again, or Group 5 raises capital elsewhere and they want to relist, for example, then it becomes relevant. Until that point, there's absolutely nothing we can do. There's no marketplace for it, there's no exchange. What another body that we would obviously get guidance from is from the company itself. Some of these guys might make an offer to outstanding shareholders, but you would argue that if they have the money to pay out delisted shareholders, then what's the point? They might as well remain listed or relist. But sometimes you do find that there's an offer from the company to try and buy back those unlisted or delisted shares. They become unlisted, right? Essentially, when they delisted. So there's nothing you can do about it.
Yeah. Great, Nilan. Thanks very much. You're definitely one of the smartest people I know and the nicest. And I think part of your niceness is that you want everybody that's an easy equities user to be as clever as you when it comes to investing. So thanks for sharing a bit of your time and brains. And a big thanks to the hundreds of users that have joined us. You guys are absolutely inspirational, and you're part of what makes our jobs fantastic. We put very high standards on ourselves, so we're very frustrated as users of our own platform, and sometimes it's too slow and when things go wrong, and we really appreciate your feedback and sticking with us and making sure that investing is accessible. So as a reminder, for the remainder of this week, Nilan and I, for half an hour in the morning, will be chatting around largely pricing and relating to that. But we'll also be guided by some of the questions we had today. Big thanks to Lesedi and Standwa and a couple of my other colleagues that have been helping answering questions. Remember to follow us on social media, lots of good info there. Go to research.easyequities.co.za, check out support.easyequities.co.za. But most of all, particularly in these crazy, hectic times that the world is suffering, trust yourself, have fun, stay in it for the long run, and happy investing. Have a good rest of the Tuesday, guys. Cheers, Nilan. Cheers to everybody
Cheers,
listening.
man. Ciao.
Cheers, guys.
Bye-bye.